Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 19th of May, 2021, and we're looking at 7 main reasons why gold is likely to surge, and soon. So let's take a look. Now, yesterday we published a video entitled Gold and Silver Prices Begin to Surge, and on Monday, Gold and Silver Price Optimism at Last. And we've placed links to both of these in the description box below. Now, at the time of producing yesterday's video, gold stood at $1,870, some $26 higher than Friday's close. At the time of producing this video, which is 9:30 GMT plus 1, we can see that gold is currently $1,867 after touching $1,875 yesterday. For some, this may seem a little disappointing, but we have to bear in mind that during this past month, gold is up by some $79 or 4.5%. It's up $96 or 5.5% over the past 3 months, and it's up $132 or 7.7% over the past 12 months. You see, gold peaked on the 7th of August 2020 at $2,067, exactly $200 higher than it is now. But there are at least 7 good reasons why we should be confident in holding our current gold assets, and for those a little more courageous or underinvested, buying more, even potentially at current levels. So let's take a look at these 7 reasons. The first, a weaker dollar, which is likely to weaken further. You see, gold tends to have an inverse relationship with the US dollar. In other words, as the dollar falls, gold prices rise and vice versa. 2, a dovish Federal Reserve Bank. Fed officials, including its chair Jerome Powell, have assured financial markets that it won't repeat past mistakes. It will continue with its accommodative or loose monetary policy, even if inflation exceeds its ideal 2% target range. Such policy will continue until the economy is once again robust and near full employment is achieved. This will continue to serve to weaken the dollar value. 3. Rising or stabilizing Treasury yields. Recent months have seen rising Treasury yields, though more recently they appear to have stabilized. Real interest rates, though, the difference between inflation and the official rate, is falling because of rising inflation, and this is normally a conducive, positive environment for higher gold prices. Reason 4. Rising inflation. Now, we've produced a number of videos, or included this in a number of videos in recent weeks, pointing out that inflation is now beginning to raise its head. You see, inflation erodes consumers' purchasing power, and this tends to push investors towards gold, especially if interest rates are not rising as a means to combat it, which, as mentioned earlier, we know that they will not rise, at least in the short term. Inflation naturally depreciates the home currency value. 5. Cryptocurrency volatility and potential decline. Now, on Monday, we produced a video entitled Bitcoin and Crypto's Crash Thanks to Elon Musk. What is going on? And we place a link to this below. In that video, we highlighted recent falls in cryptos, especially Bitcoin. The falls continuing yesterday and have worsened again today, with Bitcoin now languishing at $39,491 as we write. We have often stated that cryptos are, to some degree, a substitute for gold and silver monies, not for the asset itself, but for investors' monies, which would normally go into precious metals, at least to some degree. Because after all, let's admit, cryptocurrencies are sexier and more volatile, with great potential for quick gains, and now, as some may witness, losses too. There is little doubt that investors will be more cautious moving forward, though you will always have the speculators, and we shall see greater monies move back into precious metals, and especially into gold. Reason 6. ETF inflows. Following on from reason 5, we're now seeing investors coming back into gold via ETFs, with Bloomberg recently confirming that bullion-backed ETFs have risen for 7 consecutive days. This is indeed a positive sign moving forward. And reason 7, potential stock market collapse. Equity markets are close to all-time highs, and as the saying states, what goes up must come down. Equity valuations are rising against earnings, and there are serious concerns that a stock market pullback, if not crash, is long overdue. Already investors are eyeing up gold and other precious metals as a potential safe haven, or at least increasing their exposure to them as a hedge and for protection. Now, there are many more reasons why gold prices may rise, and a few as to why they may also fall. There's no absolute certainty in these markets, except if we take the longer term into account. Now, we have some US data being published from today onwards, with the Fed minutes being announced later today, the weekly jobless claims reports being declared tomorrow, and manufacturing and services PMIs being announced on Friday. So a fair amount for investors to get their teeth into, any or all of which could affect gold prices. We are indeed in interesting territory, or at least entering interesting territory. The sleepy giant of gold has certainly awakened, and we will see over the next couple of weeks if he will get up, walk and begin to run, or just turn back over again and doze. Now, we've given 7 good reasons why the getting up and walking and then hopefully running scenario is likely. But the question is, as always, one of timing. Is this the moment at which the giant awakes? What do you think? Do share your thoughts, express them below, and if you haven't done so, please subscribe to our channel, pressing the bell sign so you're notified of our videos as and when they are published. We're going to end this video with a short article from Bloomberg, but at least the main gamut of this production has been completed. But we thought that an article published this morning would at least be of some interest. And then we shall naturally close the video. Bloomberg article dated May 19th, 2021. Stocks, US futures drop on inflation concern. Stocks fell with US futures Wednesday as concerns about faster inflation and COVID-19 flare-ups in some nations rattled investors. Oil dropped for a second day. The Stocks Europe 600 index fell the most in a week, with commodity and leisure shares leading the drop. Contracts on all 3 US benchmarks were lower, led by those on the Nasdaq 100 index, signaling further declines for technology shares after Tuesday's slide. Asian shares also fell, and Australian equities had their worst day in almost 3 months. Yields on 10-year treasuries rose, while the dollar held near its lowest level this year. Oil dropped on rising US stockpiles and the possibility of more supply from Iran. Markets were closed Wednesday in Hong Kong and South Korea. Stocks have lost steam in recent sessions, with pricier sectors such as technology tumbling, as investor optimism about an economic rebound has given way to worries about inflation and a COVID-19 resurgence in some countries. While policymakers have signalled they intend to maintain an accommodative stance for some time to come, traders will pass minutes from the Federal Reserve's last meeting due later today for clues about the outlook. The market has been trying to process a very unusual economic environment and a confluence of factors that it has not faced for a long time, said David Donabedian, Chief Investment Officer of CIBC Private Wealth Management. I personally would say that the stock market has absorbed it all extremely well because there's still a high conviction view of earnings being strong. Elsewhere, Bitcoin and other cryptocurrencies extended a tumble, in part after the People's Bank of China reiterated that digital tokens cannot be used as a form of payment. Here are some key events this week. The Fed publishes minutes from its April meeting Wednesday, which may provide clues to officials' views on the recovery and how they define transitory when it comes to inflation. EIA crude oil inventory report Wednesday. St. Louis Fed President James Bullard and Atlanta Fed President Raphael Bostic to speak at separate events on Wednesday. IMF Managing Director Kristalina Georgieva and ECB President Christine Lagarde speak at the Vienna Economic Dialogue Thursday, and Euro area finance ministers and central bank chiefs hold an informal meeting. A larger group of EU finance ministers and central bank chiefs will meet on May 22nd. These are some of the main moves in markets. Stocks 600 fell 1%. Futures on the S&P 500 fell 0.5%. Futures on the Nasdaq 100 fell 0.8%. Futures on the Dow Jones Industrial Average fell 0.4%. The MSCI Asia Pacific Index fell 0.5%. And the MSCI Emerging Markets Index was little changed. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.